So hi everyone, welcome. So today we are going to see that how do institutions actually trade in the market, and this is something which I have built upon in the span of 11 months, and it is purely mathematical idea. There is no element of uh, AI or any kind of machine learning. So it is purely mathematical, and it is based on the pure option chain theory, which I have understood from the various books all around the academic sectors in the world. So this is all about the segregation of, let me explain you, and it is going to be slightly what I can call informational. Okay, and it is not about to suggest you a trade or recommend you a trade, but it is all about how to analyze the trade and how to manage your risk, and it is mostly for the prop deskers who are interested in uh, prop deskers, or the traders who are actually interested in you can say hedged trades and not the naked trades, because naked trades you will have a lot of risk, we all know that. And I haven't made this particular thing for such kind of trades. Okay, so let me explain you that this is quantitative analytics, and it is part of OCA Pro. You can visit it over this website oca-pro.com. So here we are going to explain you, and this is just a few snapshot. Let me tell you, there is huge collection of data which I am doing in live, and it requires a good amount of uh, computational power. So right now, if I say that for each 45 minutes, there is about 1 million ticks to be analyzed. And if I tell you from 1 million, then I mean that it is all about the volume. Okay, call volume and put volume. So we all know that if somehow we can segregate the volume in the option chain, then we can have the better idea of the trade. So this is based on the idea of volume segregation. Okay, so in general I can say that whatever I am trying to do, it is order flow analysis. Order flow analysis. So I will explain each and every part in detail. At the same time, I will also try to tell you the interpretation, that how should you interpret. So interpretation style is interpretation style will be from the writer's perspective. From the writer's perspective. So for bullish point of view, you should see that put side should be stronger than call side, and for the bearish part, call side should be stronger than put side. It is the bull point of view, it is bear point of view. Okay, so um, let me just explain you something. So these are some models which I studied in detail, and these are some the statistical tools which I actually implemented over those 11 month. Okay, so these all are great book. If someone wants to study, they can message me on Telegram. I will love to share for the sake of intellectual growth, but for the sake of or understanding, uh, let us try to focus on this part. So I will make you understand that why this works and why it will give you the analytics. But let me be very clear and honest. It is about the analytics and not the recommendation. And with analytics I can tell you that it will protect you, it will protect you from fake breakouts, or you might say fake reversal. It will also tell you when big players are not in market, and you can when big players are not in market, and you can expect sideways market with no direction, sideways market with no direction. Okay, great. So this is what we have worked upon. This is what I have named X factor. So X are the people who are unknown people, they are ghosts, and they have the capability to move the market. So the analysis goes like that: whenever the X factor grows at particular strike and it is more than 0.6, you can say that there is institutional activity. You can say that there is institutional activity. So these are the three different snapshots which I have stitched together. So we can see that this snapshot is from time 0 to 14 p.m. for Nifty 50 on the date on today, that is 09 December. Okay. This is at 0 to 28 p.m. and this is 0 to 35 p.m. So let me tell you how can you can use this to get away from the market and to get enter into the market as well. So the data will have the answer for you. Okay. So at first, let me tell you that these are the segregated call volume and these are the segregated put volume. Okay. Then you have put open interest and then you have call open interest, and then you have LTPs. You can see everywhere you have the strikes, the important strikes around the ATM. Okay. And this call change in open interest, it is notional only, like from the time snapshot I was analyzing the market for this. So for the time being, in the finished version you will get it from day start to day end, but for the time being you are going to ignore it. At the same time, for the time being you are going to ignore it, but this is what we have the most important part, that is net flow. So let me tell you, at this strike the flow was slightly positive. Okay, and this all, the flow was negative, the flow was positive, and this was the flow. And let me tell you, this is the volume extent. So you can see that at 900, 950, and this all were the strikes with huge volume. It is 1899, 1642, 1882, and here we have um, around 875, 1196, or 1551. So you can see that the put volume around put volume around put is less than volume around call. And as we have our hypothesis that we are going to see it as a seller's perspective, so this is going to be bullish signal for us. Mm, because put is less, so it is going to be bearish signal for us. I mean, on call side there is higher amount of writing or participation, whatever you may call. For I have removed the buyers part from this for the reason that buyers are very small in capacity. For the selling you need to pay 2 lakh, but for the buying you need to pay just 5,000, 10,000, 15,000. So for that reason we can assume that, and buyers also are the people who are going to face the decay, so they are not inherently the stronger people in the market. For that reason, because they are not as strong, we are not going to analyze them. We are only going to analyze who are a stronger participant in the market. So that is the rationality behind the seller's perspective. So you can see that if I say that for these four strikes, that is 25, 852, 26,000, the net volume would be around 1900 plus 1600 plus 18, 1200. Let's round it out, and then again around 1100. Okay, so it is going to be 3000, 42, 4200 and 16, 5800 million, and it is notional. Okay, it is notional. It has the relative weight, not the absolute weight. Relative weight means you need to compare the volume of call with put. Here we can have the put volume, that is 1500 something plus 1200 plus 900, let's say, and then around 243, so let's call it 250. So it is going to be 2700 and 936, so it is mostly around 3800 something. So you can see that, let me tell you very clearly, you can see that call volume is around 5800 million roughly, and put volume on other hand is around 3800 million. So you can see that there is a considerable amount of difference in the volume participation as well. Okay, so this is the moment where we need to take care of both. Now let me tell you that this flow thing. So you can see that the supportive flow is very less. Okay, and it has to be relative. I will tell you, like, one snapshot cannot tell you the complete picture, but when you compare the snapshot, you will get the better idea that okay, what is happening and what is not happening. So you know that the market was trying to push forward 25,900 nifty, but it could not do so. Now we know the whole picture, but at that time you will have this particular information. But then you notice one very important part, and that very important part was that um, you can see that this x factor of the put, which is around 0 0.35, 0 0.35, 0 0.42, 0 0.48. So whenever it is less than 0 0.6, so whenever, let me tell you, whenever x factor for anything like call or put, it is the combined factor, whenever it is less than 0 0.6, you can call it retailers led market, retailers led or participated market. So we can say that okay, retailers are, or in general there is not much put writing activity, so market is not going to get good support from this point of time and for those particular strikes. But at the same time, whenever you see that there is call side, so you can see that these are the considerably greater amount of like in percentage wise, and it is double, 80%, 70%. If you say that the corresponding put is around 0.4, and it is going to be for the call volume, call the x factor is 0.54, so you know that it is around 40% higher. Okay, so this is the good win. At the same stands for here, then same stands for here. But what is the outlier for us here is the 24,150 strike here. So here we notice that this surpassed 0.6, and it is in fact greater than this by 20%, and it can confirm that it is institutional activity we have detected here at that particular moment. Okay, so we will have to then plot the dynamic graph of it, so we know that till when time there was institutional activity and when there was not. So that is the dynamic part. But for this particular thing, we have this information that okay, there was institutional activity and these all had the institutional activity. We can see that at 25 26,000 there was a good volume and better institutional activity metrics as well. So we know that this is the time that when the market is being pushed down from upward and there will be no breakout. Okay, of course this is also visible on the chart as well, but this is the confirmation from the data side. And you can see that within next 14 minutes, it is from 14, it is now 2:28 p.m. The market came from 28,895 to 25,895 to 25,821. So it is the great fall compared to the option, because on the expiry day we all know that the option price will be greatly inflated on the put side. Okay, so now let us see the metrics that now the strike changed from 25,900 to 25,800, and this all flow became negative. Okay, and the informed information like x factor from 0.54 to it started increasing, in fact. Okay, 0.58853 and so on, and at the same time from put side it decreased. Okay, so earlier it was something better, but now it even decreased. So you know the whole pressure. So from the put side there is no writing confidence, but from the call side there is good amount of writing confidence. So you know that the skew was very real. But now let us move forward, like when to exit from the market. Because if you are a buyer, you are going to get you are going to face the decay. So you need to know what is the exit time. Because on the spread, either you can, for the bearish market you could have the bear put spread, or bear call spread, something like that. Whatever the strategy is, your like your primary trade could be buying and secondary trade could be selling for the hedging purpose. So in that way, if you do the bear put spread, then you will have the quick capture of the momentum. Okay, so inflated price you will be able to book. So that is your own strategy, but here is the analytics part. So a spot was at 25,821, and at 0235 the spot was at same value, that is it was also 25,821. Okay, but at this time you can see that there was considerable amount of flow or a defense, you can say, from the put side as well. So market was not in the mood to go further down. Okay, at the same time you can see that the institutional activity actually increased here. Okay, it went till 0.46, 0.5, 0.437. So you know that okay, now the defense has been activated. Okay, market went down, but it is not going to get down further anymore. So it is your time to exit if you are in the primary buy side. But if you are in the primary sell side, then you need to compare the skew. So skew is still higher on the caller side, so you can think that okay, let us wait for 1 more hour to eat the whole decay of the option price. So whatever your position is. Okay, and you can see that this this call saw the considerable amount of volume. Okay, and the put had less of that. So this is and you should see it in the way that this is the strike, so you could see that what is happening here and then what is happening here. Okay, so this is a strike, so you should see this area and this area. You should ignore for the time being this area and for the time being this area. Okay, and we know that these are the put strikes and these are the call strikes. So now you know that okay, there was the institutional activity. As soon as you detected the institutional activity, you had to enter the market. And let me tell you what happened at 2:14. Let us see on the chart of the trading view itself. So see that this was the exact moment when the fall was there. So it had the possibility of I can say um, okay, so this was the exact moment at 14 that fall started, and you could have trusted the fall because there was the significant institutional activity. Like we can also see okay, this could be a trap, let us not go in the market, because whole day the market has, like not whole day but for the considerable amount of period, like for the previous 2.5 hour or 2 hour the market was in the sideways range, so it is going to get us decayed. But no, this was the significant time that when you can see, okay, there is significant institutional activity at this 26050 strike, and we should enter the market. Okay. So this is the complete thing, and this is the net flow and this all thing. So you know that you have the considerable edge, and that somehow you are going to get this aggregated volume for the call and put, and at the same time you can get the direct evidence of the institutional participation. So this is going to augment your chart reading skill, augment the way you are going to use indicators on TradingView or anywhere else, the established whatever the indicators are. So at this time, if you can see that over the 5 minute chart the market is at considerable over bout region on RSI chart, so you know that you have additional confirmation. If you see that the market was trying to break the 15 EMA line or 20 EMA line on the 15-minute chart or 5 minute chart, then you have the additional confirmation. But this will be your primary confidence booster. So this is what we are making as a part of OCAPro.com. Okay, option chain analyzer pro.com, and you can take the trial. There is no need to purchase it right now, just take it as a trial, have your confidence, because each and every tool will have some kind of, you will have to get assimilated with its idea. So this was what I had to offer, that you can see that there was the indication, and the indication will tell you the skew from the call side and the put side. And this X factor, let me make it clear for you. This X factor, either for call or put. So what is this? So this is going to range in between 0 to 1. Okay, so 0 means no institutional activity. 0 means no institutional activity, and 1 means most institutional activity. Okay, so basically I have classified it as per the data that it is less than, if it is less than 0.3. Okay, if it is less than 0.3, then you should think that retailers are doing their job and there will be not much activity. 0.3 to 0.59, okay, it will grow, and it will be the mix of both. Okay, the institutions will be there. So let me see, mild amount of institution, and then whenever it grows more than 0.6, you will have the better conviction that more institutions are participating. Okay, so this all will be your the confirmation. So this confirmation is going to help you a lot. Okay, so soon what will have, as it is in the primary testing phase. Okay, so mathematics is ready, the mathematical algorithm has been implemented, but right now you will have to analyze it with your own basic mathematical arithmetic skill, not the mathematical skill. You will have to check, okay, here it is. So soon we are going to add something like alerts and some signal which will range from minus 100 to plus 100, and minus 100 means you have the bearish setup from the current position of the market, and it means that you have bullish sector, bullish tilt. Okay, so the score will be something in between that, and you can know that what is market trying to tell you. So I hope this pure mathematical part is going to add the edge to the proprietary trading people and the retailers who are actually trying to have some edge, that okay, we will trade less and we will trade better. Okay, so let us conclude. In the next video I will try to take the time out to explain how the dashboard of the current OCA Pro works. So let me tell you what is OCA Pro. So OCA means um, option chain analyzer. Option chain analyzer. Okay, this pro is something which is like something advanced of its kind. So this is, and you all are welcome to test it. For this particular version which we just talked about, this will be available in probably 2 weeks. It is in the backend part only. We have no front end as well, front end as of now, and we are actually seeking some good people to make the front end. So that's in the uh, regime of development. So once we get it developed, it will be deployed. Okay, but this uses the huge computation part. So but that is fine. If anything is delivering the result, the computation is what we can go for. So thank you so much for watching this video, and keep suggesting me. Let me tell you that here I have my Telegram channel which you can join, and it is also given on the website as well. So you can search OCA_pro on Telegram. Okay, then you will find the channel, and it is also given on the website OCA-pro.com. So let me tell you, these are different. This is underscore for the Telegram, because Telegram does not allow the hyphen, but for the website we have hyphen. So it was little bit technical and detailed, but I think it serves the purpose well. Those who know how to read the quantitative data, they will have definite A's on this. So thank you so much. Have a nice day. Let us meet again in the next video.